Good evening and welcome to the Money Show. I'm Kavita Thapliyal and this is the show where we take care of your earning, spending and investing, because despite you having your life financial goal, financial freedom is the ultimate and the truest goal that we help you achieve too. Today we are decoding one of the biggest changes to your personal finances in recent years, India's new labor codes. That's right, these rules are now in effect and they could directly impact your salary slip, your take home, your PF, your gratuity and even the way your CTC is structured. So let's begin. What's changing? The government has implemented 4 major labor code: the Code on Wages 2019, Industrial Relations Code 2020, Code on Social Security 2020 and Occupational Safety, Health and Working Conditions Code 2020, replacing 29 older labor laws. That's right. Now, these codes cover things like wages and bonus, employment relations, social security, PF, gratuity, insurance, working conditions and definition of worker types, for example, fixed term, gig or platform contract, among others. Some of the key benefits and safeguards introduced over here are a national floor wage benchmark, so minimum wages are more uniform. Workers on fixed term contracts or gig or platform workers are now getting rights to closer to permanent employees. For example, they are getting leaves, medical security, social security. For fixed-term employees, eligibility for gratuity, a lump sum payment when you leave has been reduced from 5 years to 1 year of service. This remains the same for permanent employees. That means it's 5 years for them. Now, for women workers also, prohibition of gender discrimination, right to equal pay for equal work, ability to work night shifts with consent and safety, broader definition of family for benefits. Now, let's talk about the definitions and inclusions. Definition and inclusion of gig workers and platform workers in the social security net. Aggregator, which is platform companies, are required to contribute a certain age, a certain percentage out here in terms of contribution for these gig workers. On the flip side, there are changes in how salary structures are to be handled, and this may impact your take-home pay, what you actually get after deductions. Now, one big rule, your basic salary must now be at least 50% of your CTC in whatever percent is notified in many cases. Because of many benefits, which is PF, gratuity, etc., are calculated on basic plus defined wage base. If basic goes up, employees' contribution goes up, they may adjust allowances which make up the take home downward to compensate. So your immediate net pay might drop even though your long-term benefits improve. Now, how this affects you and what should do to watch out for. If you are on a fixed term contract, you will have more rights, definitely, like permanent staff, etc. You'll be eligible for gratuity after 1 year, medical school, medical social benefits, leaves, etc. Now that's a win, definitely. But if you are a gig or platform worker, earlier many of your rights were weak. Now you are explicitly defined and entitled to social security, etc., which is good improvement, definitely. If you are a women worker, better protections for equal pay, broader opportunities, better definitions of family benefits. However, in your salary split, trade-offs may occur. For example, if your CTC stays the same but basic salary increases to meet the law, definitely, allowances which are less taxed or more flexible may go down. Your take-home might reduce. Employer contributions to PF gratuity might rise now, since they apply on higher base as well. Again, less immediate cash, more locked-in benefits for you. So when you get your pay slip next time, check what your basic salary is versus previous, how much allowance has changed, what your reduction, which is PF and gratuity, are. Ask your HR, is my take-home going to change because of the new law, or has CTC changed? And if you are negotiating salary soon, make sure the CTC properly reflects these changes and how you agree on how much of your salary is basic versus allowances and how your benefits will work out. So Imagine you have a CTC of 10 lakhs a year. Suppose previously your basic pay was 4 lakh, which is 40% of your CTC. Allowance is 6 lakh. Under the new law, your employer might need to ensure basic is at least 50%, that is 5 lakhs. The extra 1 lakh to basic means higher PF, gratuity contributions, since they are based on basics. Now, to keep the CTC same, allowances might reduce from 6 lakhs to 5 lakhs. So your immediate take home reduced by the allowances drop, but your long-term benefit pool is larger because PF gratuity base is higher. Now let's deep dive into this and understand the other various aspects. Kunal Kabra of Custodian is here with us to help us elaborate more on this. Kunal, hi, good evening. Welcome to the Money Show. So a very basic question. On the new code front, it looks like a win-win, okay? But then there are a lot of other aspects and branches of it which we need to understand. It's specifically technicalities, okay, which we don't have any clarity yet, a lot of gray zone out there. So what are the points, according to you, where you think there is clarity needed?
Sure. Thank you, Kavita, for having me on the show. And I think you've covered very well on all the major pointers. One thing to primarily note over here is that these were, proposed 5 years back, and now they are getting into implementation. Again, these are not laws fully; they are codes. So it's more like a framework that the central government has proposed, and then there would be more of what states would be saying it. So, for example, when you say the floor benchmark, right, the government is yet to say what that floor benchmark wage would be, and on top of that, states would have their individual freedom to choose if their state specific benchmark could be higher than that. So, of course, now since they are already into implementation since 21st of November, I would say, there would be still some confusion between the HR teams, between their vendors and the employees on what exactly the pay slip and pay structure should look like. But the rules are still yet to develop. There are more clarity pending from the central government as well as the state government on how the implementation part of that would be calculated, right? Once that is there, probably it might not be your November's pay slip, it might be your December or January's pay slip that would start reflecting those changes. However, having said that, you are very well covered on how the pay slips could change, and this is definitely because majority of the people or majority salaries in India have basic as a lower portion of the 50% that the government has currently proposed, which means once your basic increases, your basic plus DA crosses 50%, your PF would definitely increase, and your gratuity, if it is calculated in your part of the CTC, that would also increase. Your take home would reduce decently. To make a good point, you will also need to check with your HR around how your CTC impacts. So, even though your salary is something, majority company calculations work on the CTC. And when these values change, you should definitely reconsider whether your CTC, whether the companies implement in a way that they are increasing the CTC itself. And if the companies are not increasing the CTC, this would definitely have short-term impact on your take home. But of course, long-term benefits would overweight in such cases. The important point for permanent employees, because the gratuity is not changed, the period is tenure is not changed, that will not have an impact, but the PF contributions would definitely have an impact. Whereas for the contract employees, where the contracts are fixed and the fixed amount is supposed to be paid to them, now this addition of gratuity, how these changes would be implemented by the companies, whether their overall contract would be revisited or whether the company would take this into their calculation and give them additional payment, that is something that will have to be seen.
All right, interesting. Now, let's just talk about and let's just focus on different category of workers. What are the standout features that benefit workers, especially for categories like contract employees, gig or platform workers, and even women. A specific definition of a fixed term employee and a permanent employee also comes segregated out here.
I think that's a very big positive step that the government has taken, because the old laws were, almost 5-6 decades old, and this was a need of the hour because our current economy has crores of people working in the gig economy, as well as women employment has also increased by a significant number. So it's very good step in the right direction, because the gig economy, people who work with your drivers at Ola, Uber, or your delivery boys at Swiggy, Zomato, right? They do not have a formal structure apart from their own unions who could defend them, how their pension works, how their health insurance works, how their different contributions work, right? And getting the aggregators or getting the companies have 1 or 2% of their revenue separate for these benefits would definitely make a good benefit for them. However, it is yet to be seen how these benefits would be delivered to the end user. So whether they would be PF and they would be enrolled in PF, or whether a separate fund would be created for them for their health benefits, or whether it could be just the pension fund, that is something that is yet to be seen. When it comes to women employment, earlier a lot of industries were not allowed to have women in nighttime employment, even though women were capable and had consent. But with these changes, now government allows that if the women has their own consent as well as the safety measures are in place, women are now allowed to work in those industries as well, those departments as well. So this definitely opens up a lot more opportunities for uh, the women employees of our country, and should definitely help us as a country, as a nation, grow much faster. So all the steps in the right direction towards whether it's gig employees or the women. If you're contract employees, earlier it was all just the fixed thing and there was no concept of PF or gratuity or anything of this. With introduction of gratuity, I think it's a added bonus for the employees that are in fixed contract, and then once the contract ends, they will have to figure out the gratuity amount could definitely help them slightly more on this direction. So a welcome step in all this direction for everyone.
All right, interesting. Now, let's also look at other various changes that one might face, especially a salaried employee now. Kunal, you also have done some work. Could you explain how the requirement that a basic salary must be at least 50% of CTC or such notified percentage, and the broader definition of this affects take-home pay, employee contribution, and long-term benefits actually decode now after this new code?
Right. So it's like, for example, if your salary is 100 rupees, and earlier, as majority of the companies in India, how they do is, 60 to 65 rupees are given as additional allowances, whereas only 30 to 40% of the salary, or 30 to 40 rupees in this 100 rupees spike goes towards your actual basic. Now, when that pie increases and becomes 50, right, your gratuity is based on that. Your PF calculations are based on PF is 12% of your basic. So if the basic increases, your PF also increases, right? How this also impacts is employer and employer share in PF gets calculated. So 12% that they need to contribute with the base increases, that also increases. So this definitely comes down that instead of 100 now, if you want to still get the same in hand, you probably would end up with 110 or 112 rupees as your CTC, which a lot of companies might not implement, which would mean that your other that was 65 previously and is now 50, that is where your in hand would get reduced, and you'll probably get again, not major difference in what you were getting previously, but a definitely 5 to 10% differentiator in what you may get in hand. And this is not a loss, because this is not going or getting lost anywhere. It's going to your benefit, it's going to your gratuity, it's going to your PF. Of course, if you decide to leave before 5 years and not getting gratuity, that's a something that will not compensate it. But otherwise, going that money going to PF is anyway additional benefit that you might be getting in PF. So overall, a good benefit if the structure changes. But it's important to note on a few points that you need to ensure that these changes reflect correctly in your payslip. Maybe not in this month, maybe next month, but they have to ensure that everything gets noted down properly. If there might be a lot of situations where your appointment letters or your offer letters might have to revisit, because the overtime laws have changed, the not not just the pay slips, but all the other factors, whether it's leave policies, whether it's overtime factor, whether it's departments where you could work, everything has changed. So you may have to revisit your offer letter and appointment letter as well.
Kunal, what happens to all the employees, who are either fixed term or maybe permanent, having 1 year gratuity now? How can they calculate all of that now? How do you basically look at your payslip now, and what's the changes which are implemented going to impact your salary slip?
Right. So your gratuity calculation doesn't change. The formula still remains the same, the tenure that you worked for and your monthly take home. But your monthly take home, since your basic wage, since that has increased, your gratuity calculation would increase. Earlier, the fixed term employees had zero gratuity, so that was not part of their payslip at all. So this new component would be added to their payslip. Now, because they are on fixed term, right, their contracts are fixed. If they are getting 1 lakh for a 3 months job, it would remain the same. But if they are contracted for more than 1 year and their CTC is slightly on the higher side, the gratuity component introduction might bring the employee as well as the employer on the negotiation table again, because then it would add significantly based on, if it, even if it is 10% addition, they probably might have to renegotiate on how this would work, right? Because it's a mandate that they have to do it. When it comes to gig workers, we are yet to see exactly how much it will be kept separately. But once that is starting to come, if it starts getting into PF, it would be additional expenses for the company, and whether they would take up as as an expense to the or the cost of the company to the employee, that will also have to be seen. So the payslip structure, what would change is your PF would definitely change if your take home is above 15,000. If it is below, then probably it might not have that much of an impact. But above 15,000, that would definitely change. Your gratuity component, some companies have that as a separate deductible in your pay slips because it is part of the CTC. If it is there, then that would definitely also increase because your basic would have increased. And that would also result in your lower take home. So your other allowances, whether it's your travel allowance or whether it's your medical allowance or all those special allowances that you get, all of that would reduce slightly, which would bring roughly 5 to 10% of reduction in what you take home every month. This is also something to note that this might not get implemented this month. So maybe, talk to your HR and figure out whether, in a couple of months, how this changes, and may have couple of to and fro as states also release their own regulations or rules on top of it. Depending on which state has what values, those would also change slightly. It would also be interesting to see when the government releases the floor wage rate, how does that impact and how does the gig economy accept it? Because gig economics right now are not very well. And once the floor wages come in, how will that be sustainable for a lot of employers? So a lot of confusion right now. And I think we'll have to wait for some more clarity from the government on the implementation side of these rules.
Right now, last question to you, and a practical advice that's needed from you for you, all of those who are listening to you. What questions to go and ask to your HR? What is my basic salary versus allowance? Has my CDC changed to offset any restructure? How have my PF gratuity composition really changed? Is that a focus point now going ahead?
Absolutely. I think you covered all the prime questions that someone should go and ask to their HR. Apart from that, especially if you are a women employee, you should definitely go and ask if there are other opportunities that have opened for you and how your leave policy changes. Plus the addition of the government mandate that now your pay should be equal, there should not be a gender discrimination. You should also get it double checked with your HR that hopefully that this is not the case. In India, we don't share our salaries, so it's very hard to find out, but you definitely cross check with your HR. If you are on a fixed term, then of course, it would be slightly more complicated to have this negotiations and discussions done. But you should definitely have a word with them on how that changes. Apart from that, irrespective of which category you fall into, do revisit your overtime component. Overtime is widely abused in our country. So how does overtime component changes, and whether you would be paid or how the hours are getting calculated? That is something that you should definitely recheck, and that should be something that would be available on your appointment letter, on your offer letter. But definitely revisit and discuss this with your HR on how those would component change. The biggest, I think, already covered by you is how the CTC changes and how the in hand would change. So I think these are just additional things that one should check with their HR, and maybe give HR also some time to come back to it as the rules evolve and finer details come in. Probably in next few weeks or maybe a month or so, things would be a lot more clear.
All right, Kunal, thanks so much for unpacking this for us. Complex reforms made clear for everyday professionals. Thank you so much. And to our viewers, we hope this has given you clarity on how the new labor codes affect you. Remember, better rights and security ahead, but also a changing salary landscape. Check your numbers and stay informed. Thank you so much for watching this, and it's time for a short break.